What is the best volume indicator for Forex and crypto day traders? As a crypto and Forex day trader, I'm always searching for tools that give me an edge. Some of the most useful tools that I've found are volume indicators. Volume indicators measure the number of lots, shares, or contracts that change hands over a given period of time. By analyzing volume data, I can determine high volume price levels, spot potential reversals, or strong further price movement. It's a sign of what may come next. In this video, I want to share the volume indicators that you might find useful for Forex day trading, including the money flow index, tick volume, and on-balance volume. These are always to be used in confluence with other indicators, never simply in isolation by themselves. Like and subscribe, and start building the discipline that traders need by staying, please, to the end. The volume indicators many traders rely on the most are the money flow index and tick volume. Again, I keep repeating myself, but to be used in confluence with other indicators. That's how you're going to become consistent as a trader. The money flow index is one of my go-to volume indicators. It uses price and total volume data to determine overbought and oversold levels. It's not like some of the other overbought and oversold indicators in that it also includes volume, not just price. When the MFI shows a high reading, it means that there's a lot of money flowing into an asset, indicating a strong price. Conversely, a low MFI signals weak momentum and often marks trend reversals. I use the MFI to spot high volume price moves early and ride the momentum. It's a confirmation signal for a continuation of the price move or the beginning of a trend. I use the MFI to enter a trade and then help stay in the trade or get out of it. All of these can help you become more of a profitable trader in the long run. Tick volume measures the number of price changes or ticks for a given asset over a given period of time. Tick volume is what's called volume on Forex trading platforms. It's not real volume, it's again just the number of price changes. High tick volume points to strong interest in an asset and the potential for large moves or change in any certain moves. Low tick volume suggests a lack of interest and lower volatility. You can check tick volume to see if a trend has enough fuel to continue or is running out of steam, so it helps you understand the power of the move, in fact, if there's going to be any momentum that it carries through with or not. In addition to the MFI and tick volume, you can monitor what's called the on-balance volume, the OBV. On-balance volume, a momentum indicator to detect trend changes. As a Forex day trader, another powerful and accurate volume indicator traders use is the on-balance volume, or OBV. This momentum indicator helps detect trend changes by tracking money flow in and out of a crypto or currency pair. The OBV calculates trading volume and adds or subtracts each day's volume based on whether the closing price is up or down. Again, this translates into a more accurate indicator overall because it's not simply just including price but volume, and over the long run, more accurate indicators along with other indicators used in confluence will create more accurate results. When the OBV rises, the bulls are in control and money flows in, and this confirms an uptrend. Conversely, a falling OBV means the bears are in control and money flows out, signaling a downtrend. The OBV works best in trending markets. You can also look for divergences between price and OBV to signal potential reversals. If the price makes a new high but the OBV fails to do so, it could mean the trend is weakening and reversal is coming. So you can see in the diagram, this is an example of that. It's called a divergence, where the OBV is diverging in terms of direction compared to the price. The same is true for new lows in a downtrend. You can see here in this picture that this is also an example of a divergence. In this case, it would be a bullish divergence, changing the trend from bearish to bullish. Using the OBV with other indicators like moving averages and support and resistance, you find, or you can mark out on your own charts, it helps validate signals and helps improve timing and results on a better entry. A better entry means a better risk to reward ratio and therefore more profits. Tick volume, how high trading volume can indicate a reversal. When there's a high tick volume, it usually means there's lots of activity and volatility. This could mean in some situations that a reversal may be forthcoming. I look for large spikes in tick volume, especially if the spike is significantly higher than the average tick for that currency pair. And then of course it has to be in confluence with other indicators that a trend reversal may be in place. These spikes show that a big move may be forthcoming. So that could be either a trend reversal or in some cases it could be a continuation of the trend. But again, you have to understand it in context. And the point is that you can provide some really good, more precise entries and therefore lead to more accurate trades in general. Often a spike in tick volume will precede a reversal in the trend. The increased activity and volatility may indicate the trend may finally be coming to an end as both buyers and sellers enter the market. One shouldn't only rely on tick volume, though. I've said this before, it has to be used in confluence with other indicators and in some cases combined with fundamental analysis or sentiment analysis. You can combine the tick volume with other technical indicators like the money flow index or on-balance volume and price action. For example, if you see a spike in tick volume and the money flow index shows bearish divergence with price, that helps confirm a downward reversal may be forthcoming. Or similarly, if the tick volume spikes and on-balance volume is increasing while the price is falling, this can signal sellers are exhausting themselves and buyers may take control of the trend. I also look for confirming price action like double bottoms or triple bottoms or other reversal patterns when tick volume spikes. The key is looking for volume extremes and other indicators combined with price patterns that point to an impending reversal. Volume weighted average price, the preferred indicator of day trading. The volume weighted average price is some traders' preferred tool because again of its accuracy and the results that it gives. The VWAP indicator takes the average price of a security or crypto asset or currency pair over a specific time frame and multiplies it by the volume at each price point, again making it more of an accurate indicator that can be used or combined with others for confluent. This gives traders an idea of the average price participated in by volume. You can use this indicator on the Forex charts to see if the current price is above or below the VWAP, which can signal if a trend may continue or reverse. When the price is above the VWAP, the majority of the volume has been transacting at higher prices, and this indicates that the trend is strong and likely to continue. This is my cue to consider going long or holding on to an existing long position. Conversely, if the price falls below the VWAP, the volume is concentrated at lower volumes, suggesting that the trend may weaken or reverse. In this case, I may exit a long trader considering entering a short one. The VWAP is a versatile indicator that can be applied to any time frame. As you can see, there's several useful volume indicators for Forex day traders to consider. By combining the best volume indicators like the money flow index, on-balance volume, or tick volume, you'll have a better sense of the overall market momentum and be able to spot trading opportunities faster and more accurately. Volume analysis, when used properly, can help determine when a trend may be continuing or ready to reverse. Experiment and find the volume indicators that work for your trading style.